Welcome to this week's Fiscal Matters. My name is Chen Tseng, Head of Research at the Financial and Fiscal Commission. I have Tando Ngozo, Research Specialist from the Financial and Fiscal Commission. Thank you for joining this conversation. We're here to talk about the Zimbabwean gold based currency that happened on the 10th of April. Have you heard about this, Tando?
Yeah, I read about it and I've followed it a bit. Still early days, as you know, just about yesterday that I think from yesterday we learned how it is actually trading in the initial stages of the currency. So yeah, it's early days. We don't know much of the details, how it's going to function. But we know that we've been through this route before, as we were discussing earlier on. Zimbabwe has tried several times to come up with a currency, the latest one being, I think, the Zimbabwean dollar that they initiated around 2019. It kept on losing its value up to this time where they've tried now to come up with a new one. But we know that predominantly they've used the US dollar for most transactions in Zimbabwe because of inflation. Inflation actually eroded their currency. It became useless. You would carry a lot of notes to buy bread, for instance. I think that's the most pressing problem that they have. So I think they're trying again. So it'll be interesting to know whether they'll succeed or not.
So let's talk monetary policy, because ultimately currencies or of this sort, ultimately it's trying to serve its purpose as a medium of exchange,
Yes.
right? For economic value, for goods and services. What does it just, and obviously when we study economics, we always say monetary policy, the key thing is always about the credibility of the financial system which it represents or it influences. So how does it come into, is it a positive sign or a negative sign to introduce a new currency of this kind, and what does it mean really for the private households, individuals, investors, and just the broader economy in terms of confidence and how the world perceives the credibility of the financial institutions or environments in Zimbabwe?
It's important to note that when it comes to let's start there. When it comes to currency, you have to back up the currency with something that will make it credible. So in most instances, it usually the reserves that the central bank has. From what we know about this particular currency is that it's going to be backed by I think 185 million US dollars worth of gold. That's one aspect, and also 100 million worth of 100 million US dollars worth of cash. So first of all, it will be interesting to see whether that will be enough to back up the currency, and because as we speak, I know that at the inception of the currency, a decision was taken, I think, by the Zimbabwean Central Bank to peg it to the US dollar at 13.8 something, 13.85. So one unit of the currency is going to be worth 13.85 US dollars, which is pretty steep. Where do you look at the fact that even the rand is close to 20 US dollars. So that's the first aspect, and then they said they will then later on enable the currency to float. Then it will then be its value will be determined also by the macro policy in Zimbabwe and the economy and everything else that comes with strengthening or weakening of a currency. So that's the one aspect of it. Now the second aspect of it that you're talking about the credibility of the financial system in Zimbabwe. It's difficult to tell because, like we all know, they've been using the US dollar as their currency. That on its own doesn't speak much to the credibility of the country. If you are to use a foreign currency to run your own transaction, it means there's something seriously wrong with your own financial system. So that's where they are, and I think by introducing a new currency, they're trying to rectify that and correct it. But for ordinary people in Zimbabwe, the most important thing that has been hurting them is the inflation, high inflation, because it erodes their purchasing power. So I think the hope that they have in this currency is that it will restore that, and it was difficult to deal with the US deal or transact in the US dollar because it's a strong currency, relatively speaking. And in this, you then if you are to do all your transaction in it, it means then you have to fork out more in terms of dealing with your transactions. So that's the aspect, and then that's the positivity maybe that will be attractive to ordinary Zimbabweans.
You're quite right. I mean, it is about what do we or what do they take to back this currency up, and whenever you try to have some kind of a bearing on the value of the currency, you need to trade in the relative currency, whether it be US dollars or and of course the with the Zim dollar and or whatever currency that is in the flow, and another, and I think if I'm not mistaken, in the previous rounds of these kind of attempts by Zimbabwe, it all ended in failure because they've run out of US dollars to trade or whatever the foreign assets that they hold, and I read that in the news that they only have 50 tons of gold in reserve, and that pales in comparison to many countries. I mean, and even they didn't even make the top 20 list in terms of the gold reserve, the production. Even it's South Africa, we are 8th, I saw, and China actually is number 1. So it does not bode very well indeed for the in terms of confidence, right? As a signal for investors to invest in this currency, so I think the trading flow will happen and changes in terms of this price might come in. Oh, and the other thing is that it says that you can't buy fuel with it for something, and it's not in circulation until end of April. The other thing about it's to do then to, and all these concerns then accumulates to be an issue of credibility and stability. Because every single time there is a change in the medium of exchange, it creates a new set of uncertainty. And we just fear, I think, from a Financial and Fiscal Commission's perspective, what's our view that and what does it mean for South Africa, using this as maybe a lesson or at least an observation? How would you say is the lesson for us?
Yeah, I think the main lesson for South Africa is that, like you correctly pointed to it when we started, that it's all about credibility. So it's important how the country is run, how the institutions are managed, and who is responsible for those institutions, because the credibility then becomes important to strengthen these institutions so that they can fulfill their mandate. So we see that if those things are not in place, like it was the case in Zimbabwe, things can easily go out of hand, and like they've done. Inflation in Zimbabwe, they've reached figures that we've never recorded in economic history, because the economy was not well managed. So the mandate of, for instance, if you contextualize that in South Africa, the mandate of the Reserve Bank of price stability to ensure that there is price stability becomes very, very important in that regard. If they lose sight of that, then we can easily slip into the route that Zimbabwe has unfortunately taken, and that has led to all the problems that they have. If you can't control inflation, you have all sorts of problems. Even they couldn't, like we've already alluded to, they couldn't have a credible and a stable currency, mainly because inflation was out of hand, and the action of printing money also added to the misery that they are having, economically speaking. So I think it's just for us is to learn that we must hold dearly to the independence of the central bank, our Reserve Bank in this case, and ensure that they are allowed the space to implement monetary policy decision without any interference from government, and they're able to ensure that we have the kind of price stability that will enable to protect the value of the currency. That is fundamental. Yeah.
And so ensure ultimately the goal is about that, as you say, price stability, the consistency of the principle, of credibility of the independent and the Reserve Bank as the central controller of liquidity and money flow in the country.
Yeah.
So maybe slightly change of track is, and that just kind of appeared, is what about this thing of Bitcoin? So Bitcoin has been in the markets for quite some time. It has gone on this roller coaster wave and of value volatility. It has a lot of, I'm not so sure if I'm smart enough to even understand how it's mined. What does it mean in terms of this so very exciting a thing that is Bitcoin or cryptocurrency?
Yeah, it's one of those things that have just come in. We I think still back, like you're saying, we're begging to understand precisely how it's going to find it. But it's in comparison to what we've been talking about, it's been there for a while, and like you're saying, it's been on a roller coaster when it comes to actually the availability. It has gone up and down in very wide cycles, if you will. But it's not clear what's backing it, because like you say, the backing of the currency, the mining as they call it, is not quite clear what is behind that, and I think that has been behind the fluctuation, wide fluctuation that we've seen, but also I think even central banks around the world are trying to understand the advent of digital currency. And how it fits into the normal currencies that we have, and if you have a digital currency, does it have to be backed up the same way like your physical currency will have, and if not, what will be behind it and what will determine its value, and Yeah, so it's the jury is still out in
Yeah.
many aspects as it were, and I think but we've seen that central banks have been willing to take it on board and try as much as possible to understand it and to embrace it and then it's one of those things that we are watching closely to see how it will turn out.
Do you feel that sometimes some of the fundamentals through economic history, there may be some notes of wisdom that I think those in power and those in the central bank should ought to revisit. For instance, the reason for the US dollar is that it was gold backed, but also debt backed.
Yes.
Especially coming out of the Second World War. In fact, there are a whole underground vaults that we always sometimes see, and there is a reason, and it's because that there's so much resource and there's so much transaction and so much of trust that is not built on nothingness, but actually really because of these resource, knowledge, technology, the goods that are in circulation, the debt that is cross country and internationally come all together and center point. Similarly to the Chinese renminbi, is not that somehow it just became so strong. It's actually because of the many years of that economic growth, the exports, all that manufacturing power, and the, I mean, in fact, they are number one in terms of the gold reserve and production. Strange enough, they are not considering this gold-backed dollar, something currency, and I think we also have to think about why not, and not be, say, oblivious to the international literature and as well as the economic history that can really teach us a lot about some of these critical decisions, and because the consequences thereof can be rightly so very much severe. We are literally playing with people's trust. In the medium of exchange is what they carry and hopefully earn to purchase goods so that they can survive. So it's not small matter indeed. So I think this. Thank you very much for today. We'll carry on as Financial Fiscal Commission. We will do some interesting discussions such as this one, and monitor this space, and make our recommendations accordingly with the evidence that we do see around the world and near us, and going forward. Thank you for today, for joining us at this Fiscal Matters. See you next time.